OPEC Plus will raise oil output from November amid concerns over a looming surplus seen in the fourth quarter. For more on that, we're going to get the latest with Gregory Brew. He's a senior analyst of energy, climate, and resources at Eurasia Group. Thanks for joining us this morning. Good to have you.
Great to be on. Thanks so much.
Okay, so I guess what was your main takeaway from OPEC's latest meeting?
Well, the main takeaway is that this is a producer group that is still moving with a degree of caution, right? There are broad expectations that the market is moving into, if not a glut, then certainly a supply-demand imbalance at the end of this year, moving into next year. And OPEC wants to signal that they are in control, that they are mindful that the curve, while still in backwardation, still suggests there's space to increase production. There's not a tremendous amount of space. They don't want to glut the market. They don't want to move so quickly that prices fall even more significantly. There was a pretty significant drop last week from $70 a barrel to around $64 a barrel for Brent. So OPEC doesn't want to move too quickly. But at the same time, they're still focused on their strategy. They want to move away from market management. They want to move towards market share. And they want to unwind these cuts moving into 2026. So that's a strategy they're going to stick with, even if they move a little bit more slowly as this glut looms at the end of this year.
So, yeah, because they talked about a modest hike in monthly production of oil. As you say, that's kind of the strategy here after we saw oil declining last week because of oversupply issues. Do you think there's a chance that OPEC Plus could even go back further if there's still oversupply issues, even with just a modest hike?
Well, this hike of around 137,000 barrels a day in November, it's even less than modest, I would say, because that figure itself is a bit of an exaggeration. As we've seen over the last 7 months, right? OPEC's been claiming to increase production by significant amounts each month. But since so many of the OPEC members are already producing past their quotas, Iraq, Kazakhstan, the UAE, they're already pumping well high, much higher than the baseline figures would suggest. When they say 130,000 barrels a day for November, it's really more like 50 or 60,000 barrels a day increase, which is a rounding error in the context of broader OPEC production. So they're moving very slowly. What would it take for them to move even slower or potentially halt? I would say significant signs that we are moving into an oversupplied market. If the curve flips from backwardation into contango, if you see inventories really start to fill, if prices fall from the 60s and into the 50s, that could give OPEC pause to slow or even stop unwinding the cuts. But I'd be wary of calling that. I think the producer group wants to move forward. They want to unwind these cuts, and they want to come into 2026 with a more blank slate when it comes to managing markets.
What are some of the challenges you're seeing right now that are currently impacting the oil sector as well as producers as a whole?
Well, demand growth is coming in a little slower than in past years. I'd look very closely at China. China's been buying a lot of crude for strategic stockpiling, and that's been helping to support prices over the last few months. But China demand growth has really slowed down in the post-COVID years. It's the result of very rapid electrification. Chinese EV penetration is way up. So we're not going to see China really moving as the engine of demand growth the way it did before COVID. And that has left a gap in the market. It's not something that states like India can fill. Obviously, India's demand growth is going to continue. But India is following a very different energy demand growth trajectory than China. They're electrifying as well. And demand growth elsewhere in the industrial world is slowing, if not declining, in places like South Korea and Japan. So in absence of strong demand growth, that doesn't leave many places for these new barrels to go. Not only do you have OPEC increasing production, you still have very high output from the U.S. You have Brazil, Guyana, Argentina adding barrels. So in the short term, it's just an imbalance between supply and demand growth. That's the most significant challenge facing the market, and that's what's likely to pull prices lower as we move into the end of the year.
And this comes at a time, too, when Canada, of course, Alberta has proposed that new pipeline running along the west coast of Canada. Is now maybe not a good time to get into the oil market, do you think, or do we kind of have to wait and see how it goes?
Well, building anything takes time, and there's going to continue to be demand growth in Asia. There's still going to be a demand for North American energy products in East Asia and South Asia. So, looking past the next 6 months, a pipeline connecting Alberta to the West Coast is probably a good investment. But, the next 6 months to 12 months, I think we are likely to see lower prices. We are likely to see supply in the market exceed demand growth. And that's going to be a challenge not only for Alberta, but also for other producers in North America. In the U.S., the shale sector has been taking a hit this year and is likely going to see even more pain coming into 2026.
We know the 8 producers will be meeting again next month on November 2nd. What do you expect to come out of that meeting? Any changes at all?
I would expect OPEC Plus to stay the course, right? They're going to continue to unwind the cut. They still have over 1 million barrels a day of a cut from several years ago to unwind. And as I said, I think they're likely to stick with this strategy, even if they move gradually. Another month of 137 barrels a day increase for December, that wouldn't surprise me, or something similar. I don't think they're going to accelerate. There were lots of rumors last week that the next production hike was going to be much bigger, something in the realm of 500,000 barrels a day. That would really spook markets right now. I think OPEC Plus is going to move cautiously, but they're going to keep adding barrels.
And just as before we wrap up here, it's Monday, obviously. We've got the week ahead of us. Are you expecting to see some positive results from this announcement today when it comes to oil prices over the next week or so?
Well, there was a little bit of a bump this morning and last night as Asian markets opened. As I mentioned, the rumors were suggesting a much larger production increase for November. So the fact that they only went with 137,000 barrels a day was received very positively by the markets. It helped bump Brent from $64 to $65 a barrel. But there's going to have to be more good news coming to support prices or lift them higher. And good news could be bad news in places like Russia. If you have an escalation in Ukrainian attacks against Russian energy infrastructure that really seriously threatens Russian oil exports, that would suggest a physical disruption and would lift prices higher moving towards the end of the week. So that's the story that I would keep eyes on. That's the most likely source of upward pressure this week.
Okay, that's what you're watching for. Well, great to have your insight. Thanks so much for joining us today. Appreciate it.
Thank you so much.
That was Gregory Brew, senior analyst of energy, climate, and resources at